This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June 22nd, 2017. Our time is 8:41 Mountain. We have a podcast through iTunes. Type in the World Financial Report on Radio. You'll find us there. We're portable. We go on any of your portable devices, podcasting. And the shows are archived on Harold's website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. And go check that website out. You can connect with Harold at 1-800-432-1022. Get our free weekly newsletter, the companion to the radio show. The info that you hear us talking about, you will be able to read. You can go through the newsletter, be completely up to date on the financial week in about 5 minutes, or you can spend hours. Our featured diamond of the week from rarecoloreddiamonds.com is a 1+ carat radiant cut fancy intense blue. And the color on this is stunningly vivid and very intense. So definitely check it out online, rarecoloreddiamonds.com, featured diamond of the week. As we tape today's program, oil, the big story. A lot of it sloshing around the world, driving prices down. Some say that it could go into the 30s at some point. Also, Sears Canada has filed for bankruptcy protection. They look to close stores in Canada and reorganize. Also, it was interesting to note that Amazon picked up Whole Foods last week. Whole Foods were looking to come into Canada, but it'll be interesting to see exactly what Amazon does with Whole Foods, and they're looking to expand in Canada as well. Amazon, Warren Buffett, that's news this morning, his company going in and buying a chunk of Home Capital Group, the company that got in trouble here in Canada with mortgages. Warren Buffett and his team stepping in and buying a big chunk of the company and hopefully be able to turn it around. But Harold, the big story of the week, oil. Oil was down substantially, and I know that a lot of people are very, very concerned.
Well, they should be. The thing is about oil is when OPEC says that they're going to cut production, which they did say, they never live up to it. So basically all these countries are in financial trouble, and they're overproducing, and OPEC has never, ever had control over their members, and they've always done this type of thing. So what you've got is a glut of oil on the market, and now you've got all these OPEC members cheating. So that's putting more oil on the market, and then you've also got the non-OPEC members. So yes, it's very possible. We're sitting at $42.97 in oil right now. No doubt oil is going into initially the high 30s and possibly lower than that. So at this particular point, the oil market is getting devastated by the cheating that's being done by OPEC. And again, with the world economies the way that they are, people just aren't driving as much, so the need for oil is down. During the summer, normally the need for oil is substantial. You know, you've got people driving on vacation type of thing, so normally oil usage in the summer is up, but it's not appearing to be that way at this time. And then don't forget, there will be a time that the refineries, are going to have to shut down, and they're going to have to go through their maintenance and things like that. So that'll affect the oil market on a short-term basis. But right now, oil is bearish and definitely going into the mid to low 30s. And again, if OPEC keeps doing what they're doing, they're going to destroy the oil market. All in all, the summertime has been very quiet for commodities, but it normally is. And at this point here, and this time of year, it's no different. So you've got the gold market right now trading up $4 on the day, but it's basically trading in a range. For the last 30 days, oil's been down only 50 cents, so it's been basically flat. And for the last year, so far this year, gold's been down $15.70. So again, we're talking about a flat market at this point. However, it's important that you understand that there's about a $200 premium in gold at this particular point. I want to call it the Trump premium, because at this point here, it's so uncertain as to what this guy is going to do that you need to have gold in your portfolio, because the fact is that we could wake up any day and find out that we're at war with some country. My guess it's going to be with North Korea. So again, at this particular point, even though the commodity markets are flat to down, the fact is that you need to own certain commodities at this point just because of the situation that we could wake up at any time and find out that we're at war, or there's a currency dilemma, or the some of the other markets are not reacting the proper way. So the derivatives market is one of the most important markets that I'm concerned about. It's a market that's in the quadrillions of dollars. It's unregulated, which is extremely hard to believe that a market that substantial is not regulated. But we saw the results of what happened with Lehman Brothers and Bear Stearns back in 2008 when they tried to get out of derivatives and their companies became extinct. So again, we've got probably the biggest position in derivatives that have ever been at a time when the markets around the world just don't know what to do. Interest rates are basically at zero. The United States is the only country in the world that can raise interest rates. We saw a rise in interest rates last week, and you saw the U.S. dollar respond to it. The U.S. dollar is back up to 97, almost 98 cents. And again, I do anticipate that the U.S. dollar will continue to be the strongest currency. In actual fact, right now it's jockeying for position, stronger against the Canadian. Even though the Canadian came back a little bit over the last couple of weeks, there's no doubt in my mind that the U.S. dollar is going tremendously higher than where it is right now. And the reason for that is that almost every economy in the world is in trouble. Europe is almost decimated. I'm Canadian, Randy's Canadian. We're not saying anything bad about Canada, but there's no doubt that the Canadian economy is in trouble right now, and a lot of it is going to be based around real estate, because real estate in Toronto and Vancouver, especially in Toronto, went up way too much too fast, and when real estate goes up by 30% in 1 month, you have a bubble. Now you've got a situation where people are liquidating into a market that is not going to be able to handle it. You're going to see prices plummet. You saw prices go up 33% in 1 month. You'll see prices come down 30 or 40% in 1 month. And, the fact is that real estate should not trade like that. It affects people's home prices, which is basically where their nest egg is. So, again, you've got to be very cautious because we've never been in a situation financially and economically that we've been in at this point. The world is in shambles financially. Europe is in shambles. The United States is doing better than most other countries, but the fact is the United States has got its issues. There's no doubt that it's got tremendous debt. There's leadership issues. And on top of that, even though they've come out with unemployment numbers that are well below 5%, we know that the workforce isn't working. So the fact is that you really need to look at investments today differently than you did at any other time. Because with interest rates down at 0.5% or lower and starting to go negative, there's no chance that people will be able to retire by keeping their money in an interest-bearing account. If you've got money sitting in the bank, you'll never, ever be able to retire because interest rates are at 0.5%. It means that if you had $1 million in the bank at 10%, you'd be making $100,000. At 1%, you'd be making $10,000. At 0.5%, you're making $5,000 a year return on $1 million sitting in the bank at 0.5%. There's no chance in the world that you'd be able to retire off of that. So what does it force you to do? It forces you into riskier investments where people are seeking a higher return. So if you're going to go into the stock market, now you're playing Russian roulette because 95% of people or 90% of people that trade their own stock positions lose their money. And in actual fact, the numbers are not that much different than a financial advisor trading your account. So these are not the times where you could put your money in the bank and get 10% and think of one day that you may be able to retire off of that money. That's just not going to happen. The fact is that you can't make money putting your money in the bank, and then on top of that, you can't keep large amounts of money in the bank because of Bill C-15, which means that you're only insured for up to $100,000, and anything over $100,000, you're susceptible to losing that money if the bank goes under. So you really need to be aware of what your opportunities are today, and the opportunities are not that tremendous because everything out there that's paper-wise seems to be speculative. There's no doubt that trading stocks is one of the riskiest things that you can do. Just look at the returns on your retirement savings plan, and you'll understand that nobody's made money in retirement savings plans of any consequence for the last decade or more. If you have money in stocks and mutual funds, chances are you're going to lose your money. If you're picking individual stocks, unless you're an expert, chances are you're not going to do very well. So what is a person to do? The fact is that you've got to look for a trend in the market, and the trend is your friend. If you can pick the right trend, the fact is you can make an awful lot of money. Best example I can give you is the trend that we started or predicted back in 2000, and it was in the gold and silver market. Gold was at 250, and the U.S. dollar was coming off its highest level ever. There's a direct correlation between the U.S. dollar and gold. When the U.S. dollar is very strong, gold is a weak commodity. And at that point, it was obvious that the U.S. dollar was at its strength, and the gold market was at its lowest level of 250. We saw 9/11 coming. We saw problems with the currency markets, and we started recommending to get out of stocks at that point and start to buy gold very heavily. Well, gold went from 250 to 1,900, the biggest bull market in history, and that was a trend that when you jumped on that train, if you jumped on at the beginning, you made a fortune. People became so wealthy from that run in metals that we've never seen anything like that before. From $250 to $1,900 in 11 years was the biggest bull market. Then we saw, and that's the type of trends that I'm talking about. So what we need to look for is if something like that could ever happen again. Well, yes, it is possible that gold could rally very strong. I see a potential of a $300 move coming in gold just based on the situation with Trump at this point and the fear in the markets and the threats against North Korea and that type of thing. So again, I wouldn't want to be without gold in my portfolio at this particular point. Not that it's the return that's going to make you the most amount of money. We have private investments that our Canadian clients have invested in for years that are based in U.S. dollars that return over 25% a year. I know it sounds ridiculously high and too good to be true, but it's not. It's been we've allowed our clients to partner with us on certain U.S. deals. It's gone extremely well, and our clients get paid in U.S. dollars and returns of 25% or more. So if that's something of interest to you, give us a call. We'll explain how the program works, and we would love to have you involved. We're also making available kilos of physical gold. So that's kilos. So it's not for the smaller investor at this point because a kilo of gold is 2.2 pounds. It's 35 ounces. A kilo of gold at this point is in the range of about 45,000. The difference between our gold programs and other companies' gold programs is our gold program is designed to help our clients make money. First of all, it's the physical program that you take delivery of your gold if you want to. Number two, anytime you buy gold, there's a spread between the bid and the ask. In any commodity, you buy at the ask and sell at the bid. There's a spread. That's where the dealers make their money, and then there's a commission on top of that the sales company makes their commission or makes their money. We don't charge that because we own our own gold mines. We actually sell to our clients at the bid price, which is the last sale. So you're not paying the spread between the bid and the ask, and we're not charging a commission. So you can literally buy gold at the cheapest possible price. So if you bought gold at $12.50, at $12.50 and 1 penny, you're in profit. That's the type of deals that we bring to our clients. On top of that, we will deliver the gold to you, or we will store the gold for you at a storage facility that's bonded, like Brinks or Malka emit. And for some that know me, that know my gold trading abilities, I'll even trade the gold for you and not even charge a commission or percentage of profit. So, again, I think the next run-up in gold or in precious metals, when it does come, we're going to make a ton of money on it. Right now, we just want to own gold because we're petrified about what's happening in the market and what we could wake up to one day with Trump as president. I still think that Trump was the right president. I think he was way better of an opportunity than Hillary Clinton. And I do believe that once he settles in, he's going to do extremely well. Again, he's not a politician, so he's rough around the edges, but he does know business, and I think ultimately he is going to do well for the country. So all in all, I think that at this point here, we need to be out of the oil market. We need to be inching into the gold market. We definitely need to get in contact with my company so you can find out about our deals that are in U.S. dollars, where our clients are making over 25%. And again, a lot of our clients are retiring based off of these investments. So if that's of interest to you, we'd love to speak to you and explain to you how you too can make over 25% a year in U.S. dollars. And again, that's something that our Canadian clients have been doing for many, many years now.
1-800-432-1022. 1-800-432-1022. That's how you connect with Harold. Call is free. Anything discussed, 100% confidential. The website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. And maybe you're here in Canada pulling money out of real estate because you're very concerned about what we're seeing around Canada, particularly in Vancouver and Toronto. We have an article in our newsletter, one of the best I have read. It's from Bloomberg, Ben Carlson. Canada's housing bubble will burst. U.S. homeowners know what can happen to the economy when the market destabilizes. Canadian home sale prices actually stayed up, but sales fell the most in 5 years last month. But that didn't stop an increase in prices, which were up 18% nationwide from a year earlier. When you consider that most houses are leveraged assets, this represents huge gains for homeowners. While leverage can help boost performance on the way up, it becomes very dangerous on the way down. Leverage can turn even the best investments into poor ones when things go wrong. The losses are amplified. Equity can get wiped out pretty quickly on an over-leveraged asset. Canadian real estate has been on fire for years. The housing price data that there has been between the U.S. real estate market during the boom of the mid-2000s looks mild compared to Canada. The Federal Reserve Bank of Dallas puts out a global housing price index for more than 20 countries every quarter. And what they did here, they put together two charts. Real housing prices, U.S. versus Canada, 1975 to 2005. Basically, we were pretty much in lockstep with the United States. Now you move to 75 to 2016, the United States, you can see them having their correction and slightly going up again, but Canada has gone parabolic. And that is a major, major concern. And I really encourage you, speak with Harold, get this article from us. Ben Carlson, Canada's housing bubble will burst. It's a must-read. 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. And connect with Harold and get our free weekly newsletter, in particular that article, Canada's housing bubble will burst. You want to protect yourself now more than ever. On the gold front, Jim Rickards, a man who's been talking about gold for a long time, an advocate of hard assets. Gold was down after last week's rate hike, but he says, I expect it to start heading higher again. Too many powerful forces are driving it behind the scenes. Dwindling physical supply is a major one. On a recent visit to Switzerland, I was informed that secure logistics operators could not build new vaults fast enough and were taking over nuclear bomb-proof mountain bunkers from the Swiss Army to handle the demand for private storage. Geopolitical fear is another. The crises in North Korea, Syria, Iran, the South China Sea, and Venezuela are not getting better. The headlines may fade in any given week, but geopolitical shocks will return when least expected and send gold soaring in a flight to safety. Fed policy tightening is normally a headwind for gold, but the last two times the Fed raised rates, December 14, 2016 and March 15, 2017, gold rallied as if on cue. Gold is the most forward-looking of any eventual over-tightening, and they actually go on to say gold is the most forward-looking of any major market. it may be the case that the gold market sees the Fed is tightening into weakness and will eventually over-tighten and cause a recession. At that point, the Fed will pivot back to easing through forward guidance. That will result in even more inflation and a weaker dollar, which is the perfect environment for gold. In short, all signs point to higher gold prices in the months ahead based on Fed ease, geopolitical tension, and a weaker dollar. A man that we have a lot of respect for is John Embry from Sprott Asset Management. It was back in 2002 when Harold was on the radio saying, buy gold. John was there at the same time. And John says when it comes to gold and silver and people being discouraged, I can't understand why they're discouraged about gold and silver, because an awful lot of people are influenced by price action rather than studying the pure fundamentals. The fundamentals are overwhelming. Gold and silver are so cheap in relation to every other asset on the planet. And Harold, we have about 2 minutes left here in our segment, and that's when you want to be buying an asset when everyone's throwing it in the scrap heap, everyone believes it's super cheap. Now is the time to take a serious look at getting involved in this gold market with the opportunity that you have for investors.
You bet, Randy. Again, you've got to own gold at this particular point because, again, all of the situations worldwide. It's not only in the United States or in Canada, it's everywhere. So, again, we don't know what the politicians are going to do because they're desperate at this point, and desperate times brings on desperate measures. And, again, we've seen it happen numerous times that these countries get into financial trouble, just like with Britain, with the Brexit situation. The decision went to the last second. Nobody knew exactly what was going to happen. And when it did happen, it was the opposite of what they thought was going to happen. And their currency market plummeted by 25% in basically 1 hour. So, again, you need to have some situations as far as safety factors in the market, and gold is that situation. It may not run right this second, but it's got the potential to do so. And looking at the charts, I see the potential over the next year or less of about a $300 move coming in the gold market, and we want to be part of that.
Connect with Harold, 1-800-432-1022, 1-800-432-1022, the website rarecoloreddiamonds.com. A great quote this week that I found. It's from a lady by the name of Quincy Crosby, Prudential Financial Chief Marketing Strategist. You invest and trade in the market you have, not the one you want. In other words, don't envelop yourself in being bullish or bearish. Just be pragmatic and opportunistic. Take advantage of the market you have. And that's one of the things we've said for a long time on the show. We're not negative. People have accused us of being negative. We're not negative. We're not positive. We're realistic. Not about positive or negative. It's about being realistic. And that's what we are doing right now. We're being realistic about where Harold sees the market and the opportunities that are available. Connect with Harold and find out more. 1-800-432-1022. rarecoloreddiamonds.com is the website. When we come back and talk about diamonds, is a World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June 22nd, 2017. Our time is 9:06 Mountain. Radio show runs 6:30 CHED, Sunday afternoon at 3. And for some reason, if you want to listen to the show again, you maybe missed a show in the past, they're archived on Harold's website, rarecoloreddiamonds.com. And we have a podcast through iTunes. Type in The World Financial Report on radio. You will find us there. And one of the great quotes that we had last week, and I want to mention it again, is from R.J. Hay, an eminent French mineralogist. He wrote, "Gems are the flowers of the mineral kingdom. Fancy-colored diamonds are the orchids. Fancy-colored diamonds, like orchids, are truly exotic and rare beasts of nature." And as well, from the Diamond PBS Natura series, Nature series, diamonds are nature's art, nature's most beautiful art. Every stone is a story, every stone tells a story. And last week, the diamond that we had, which was our featured diamond, it was an absolutely gorgeous, beautiful, and it was a light. It was a light blue. It was a 1 carat radiant cut, fancy light blue. Now this week, we have for you, featured diamond of the week, rarecoloreddiamonds.com, a 1+ carat radiant cut, fancy intense blue. So we went from a light blue to an intense blue, and both are beautiful, but you really notice the difference. And what a beautiful diamond this is. As we've said before, blues have really become so popular due to, obviously, auctions with Christie's and Sotheby's. And on top of it, you have great stories like Shirley Temple back in 1940. Her dad picking up a blue diamond for her, and it was worth about $7,200. And some 40 years later, they sell it at auction for $25 million. And that's a great, great story. You can see where these are generational wealth, and generational wealth can be passed down. And that's one thing, Harold, when it comes to rare colored diamonds, that's the aspect of it we really like, because it's something that I know that you're passing on diamonds to your children, your grandchildren, and those diamonds will be passed on from generation to generation. And somewhere down the line, there's going to be people that are very, very happy with the amount of money they potentially could generate if they took them to auction, because these are so rare. They are nature's art, one of a kind. And this featured diamond this week is so, so beautiful.
You bet. Again, it's a stunning diamond, and blue diamonds have just done better at this point than any other diamond. It's really been a phenomenon. I mean, in 2005, important vivid blue diamonds were selling at auction for around $200,000 a carat, and as of 2016 and 17, important vivid blue diamonds have been selling for over $5 million a carat. I've never seen anything like it in any commodity ever, whether it be real estate, whether it be stocks, whether it be anything. Nothing has outdone what these blue diamonds have done. And now it's almost impossible to get a blue diamond. So if you happen to own one and you put that diamond away, you're talking about something that will give returns like nothing you've ever seen before. So diamonds are not a short-term investment. You don't buy them for a couple of years or 5 years or something like that. You're just not going to make any real money with them. It's an asset that you put away for a longer period of time. It's got tremendous benefits. It could be sold in other currencies. They never decline in value, which is extremely important, because we all go into an investment thinking that we're going to make money on it. But the most important thing is capital preservation, investing in something that will preserve its equity and then give you an opportunity to make money. So it isn't always about capital appreciation. It's about capital preservation, and that is extremely important. The last thing you want to do is go into an investment and lose all your money. That's possible in stocks and commodities. In fact, it happens all the time. 90 to 95% of people that trade stocks and commodities on their own lose their money. Even with financial advisors, most people lose money in stocks. So the fact is that those type of investments are not comfortable for most people. You need to diversify, but in today's world, what do you diversify into? Going into stock markets, as we discussed, is extremely risky. On top of that, putting your money in the bank is risky, and you get no returns for it. So what's a person to do? It almost leads you into a speculative situation. You know, we try to do the right thing. We work very hard. We put away our money. We're frugal. We pay our bills, and we want to put away something for our future so one day that we can retire. But the fact is that putting your money into a retirement savings plan, which was the exit strategy. That's what everybody felt. By doing the right thing, by putting your money away for 20, 30, 40 years, working hard, one day you're going to be able to retire. Well, those days are out the window, unfortunately, for most people, because interest rates drop down to almost zero and soon will be in negative. Meaning that for the first time ever, you'll put your money into the bank, and instead of getting a return, you're going to have to pay them to warehouse your money. That's how bad things are getting. So when you think about it, how are you ever going to retire? Diamonds, rare color diamonds, have done a phenomenal job over the long term. It's an asset you want to hold on to for 10, 15, 20, 30, 40 years. Look what happened, as Randy brought up, with with diamonds in the past that have gone and stayed in a family trust, which is, in a lot of cases, what happens. You put a diamond away, or you put assets away, and if you don't need those assets to live and to retire on, those are the type of assets that you give to your family, to your kids and your grandkids, and that's how wealth is shared. The fact is that there's new money and there's old money. Old money is money that's handed down from generation to generation, and that's what I'm talking about. When you put away a diamond, even a $20,000 diamond today, in 20, 30 years, could be 2, 3, 4, 5 times that amount. We've seen that happen many times. Yellow flawless diamonds, back in 1980, you could have bought a 1-carat fancy yellow flawless diamond for about $500. Today, they're over $20,000. That's a tremendous return on investment. And that happens, sure, it's over the last 36 years, but you're talking about an asset that went from $500 to over $20,000. That's why I've been putting away those type of assets for my children and grandchildren. Mostly at this point, my grandchildren, because again, I think that the world that they're heading into is going to be extremely difficult. You're talking that it's almost going to be like a lost generation. Unemployment is rampant. Good jobs are not available. They're burdened with tremendous debt from education, and there's no real jobs out there that's really going to improve the economy, because the economy can only get better when future generations do better, and that's not happening. It's not happening in North America, and it's certainly not happening in Europe, where unemployment is over 60% amongst kids coming out of college. So they're still living with their parents. So the fact is that it's going to be extremely difficult for that generation to make money and to make a living and to contribute to the economy. They won't be paying taxes. They won't be buying homes and, expensive cars and things like that, because they won't have jobs. So the fact is that you've got to invest smart. And it's extremely difficult today. But putting away assets like a diamond that will not lose its value, and the longer you hold on to it, the more it'll make money, is a logical thing to do. It makes more sense than buying a retirement savings plan, because you could put your money away for 30, 40 years and not make any money on it, but that would not be the case with a rare colored diamond. The other thing is if war breaks out or currencies go south or something happens, it's one of the best assets to own. So I'm very excited about what's happening in the diamond market. I mentioned earlier in the show about trends, that we caught the trend in gold from $250 to $1,900. We caught a trend in oil from $18 to $150. We caught the initial trend in the euro when it first came out, and we made an awful lot of money, even though we are very conservative with it. The next trend in diamonds is in green diamonds. We've seen blues skyrocket. We are just about to see pink diamonds skyrocket, because the mine that produces them is going to close in less than 3 years, and we anticipate the price of pink diamonds going through the roof. We have pink diamonds starting in the $40,000 to $50,000 range that we feel will be some of the best investments that you've ever made. The biggest returns also. On top of that, the next major trend are in green and orange diamonds, and it's time to get involved on the ground floor, and you can do that without even owning the actual diamond, being a partner in the diamond with me and my company. So the fact is, we bring opportunities to our Canadian clients that will pay you in U.S. dollars, and you're going to be in the exact same investment that I'm in. This is what I buy personally, and allow my clients to be my partners in this, and all transactions are done in U.S. dollars. We believe that the U.S. dollar is going to continue to move substantially higher, and unfortunately the Canadian is going to continue to drop, because of Canada is a commodity-based economy, and commodities are not doing well now. So we need to change ship, we need to redirect, and we've got tremendous opportunity. Give me a call. I'll explain our programs to you, and I can literally help you with either income of about 25% a year, or to show you how to grow your money being partners in some of these amazing rough diamonds that we've been able to procure and to cut and polish. So, again, give me a call. be more than happy to discuss your financial situation, make recommendations to you, and try to direct you in the proper area that you're going to be able to one day retire comfortably, and that's what all of our goals are.
Connect with Harold, 1-800-432-1022. Speak with Harold personally, privately, 1-800-432-1022. The website, rarecoloreddiamonds.com, and get the article this week from our free weekly newsletter, Ben Carlson, Canada's housing bubble will burst. And if we see oil go down into the 30s, you add that to a housing market that starts to turn over. As much as there's optimism about Canada and the Bank of Canada sort of talking about raising rates, I don't see it happening because it just cannot. If oil rolls over, it will really affect the economy. And if housing rolls over, we're in real trouble. So now is the time to be very safe, very conservative. Speak with Harold. Find out some of the different investment opportunities that he has. 1-800-432-1022. The website, rarecoloreddiamonds.com. Our featured diamond of the week, 1+ carat, radiant cut, fancy intense blue. Last week we had a light blue. This week a fancy intense blue. Both are gorgeous, and you can speak with Harold about investing in that diamond. Now this week, Christie's Magnificent Jewels and the Rockefeller Emerald. There was an auction June 20, 2017, Rockefeller Center, New York. I guess it's only appropriate since that the Rockefeller Emerald sold. But Harold, you talk about a backstory on this emerald. Normally we don't talk about emeralds, but we're going to today just because we specialize in diamonds. But the backstory on this emerald is stunning. Harry Winston spent $5.5 million on historic emerald. Harry Winston bought the Rockefeller Emerald for a record price per carat at Christie's, New York on Tuesday. The luxury jeweler CEO, Nayla Hayek, had instructed her chief financial officer, Robert Scott, bring this magnificent gem home at any price. You heard right, at any price. Christie's reported Wednesday. That price was $5.5 million, setting a world record of $305,516 per carat for an emerald at auction. And it is a beauty. Christie's offered the octagonal step-cut 18.04 carat emerald ring. And this is where it gets interesting. On behalf of a private American collector who had owned it for more than a decade, John D. Rockefeller Jr. acquired the stone in 1930 as the centerpiece of a brooch for his wife, Abby Aldrich Rockefeller. When she died in 1948, their youngest son, David Rockefeller, inherited it and instructed designer Raymond Yard to set it in a ring. The piece later passed from the family into private ownership. Harry Winston is immensely proud to own the finest emerald in the world, which once belonged to one of America's most important dynasties. The acquisition comes less than a month after the jeweler spent $8.9 million or $2.2 million per carat on a fancy, vivid blue diamond at Christie's, Hong Kong. And we have a few auction results for you. Lot 273, an extraordinary colored diamond ring, and the diamond ring was a deep grayish bluish green diamond, 5 carats. The estimate on it, $2 million, went for $4.3. Lot 125, a rare colored diamond and diamond ring, and this was a fancy intense green. It actually, the estimate on that diamond was $1.3 million. It went for right around $1.3. Lot 114, an impressive pair of colored diamond and diamond ear pendants by Bulgari, and they were yellow, fancy yellow, weighing 11.87 and 10.47 carats. The estimate on that, it was $350, went for $427,500. Lot, and this is where it's getting interesting as we get to the final few. Lot 118, a colored diamond ring, set with a cut-cornered square modified cut fancy blue-gray diamond, weighing approximately 3.9 carats. And the estimate on it, $200,000, went for $271,500. Lot 120, a colored diamond and diamond ring, set with a oval mixed color cut light pink diamond, and it was weighing 5.10 carats. The estimate on it, 200,000, went for 235,500. And Harold, we always talk about the smaller diamonds and the ones that have maybe the lower prices giving you the biggest juice when it comes to price appreciation. Lot 170, colored diamond ring from Louis Comfort Tiffany and Company of obviously New York City. And this diamond ring was so beautiful. It had yellow diamonds, and the estimate on it was $30,000. It went for $87,500. You can see the diamond ring. Click on the link in our free weekly newsletter. It will take you to the 3 marquee cut yellow diamonds in this ring. Very, very beautiful. They were fancy, intense yellow diamonds. And then lot 263, colored diamond and diamond ring by Tiffany and Company. And this was a fancy, intense yellow, weighing 4.17 carats. The estimate on it, $40,000. It went for $75,000. And Harold, that's a trend that we have seen for quite some time. The lower price diamonds giving you more of a juice when it comes to obviously a return when you go to sell at auction. But what a great story, Harold, on that emerald and the provenance surrounding it. And I love how the boss of the company, Harry Winston, said, get it at any price. They wanted it bad. They wanted it bad, Harold.
Well, that just goes along with what we've just been talking about, that, again, it's an asset that stayed in the family for a long time, but look at what the end result was. It turned out to be a premier piece, the best in the world, and fetched that price at auction. So, again, I'm glad that you brought this up, Randy, because that just proves that point, that, again, on a longer-term basis, the rare colored diamonds and rare gems can get the job done for you, and that's what we need. There's no good short-term investments per se that are going to give you the returns of a long-term investment, and that's why families like the Rockefellers and families like them, keep those assets within the family. They know about money. They understand assets. They understand that not everything is a quick flip. They look to get the maximum return on their invested dollar, and that's exactly what these gems will bring to you. I'm so excited about the results that you just gave us, especially to prove the point that on the lesser expensive diamonds, that the returns are substantially higher. The fact is that the experts at these major auction houses that give their estimates as to what these diamonds or these pieces are worth, when it goes for double or triple what they had suggested that it would sell for, it's not that they don't know their business. They do know their business. That's why, they're in the position they are. The thing is that it's the general public that understands that there's value in these type of assets and want them at almost any cost. And that's what the situation is. We've been saying that our auctions were coming up, and they are coming up very, very soon. It was a lot more involved than we anticipated because we just built a brand new auction site to go along with our live auction site. So we're about, I would say, a week and a half from it starting. We're just going through all the advertising to attract our new clientele. The catalog is spectacular. Just some of the highlights of the catalog that's coming up is Elizabeth Taylor's brooch and a picture of Elizabeth Taylor actually wearing this magnificent brooch. We have a phenomenal diamond, one of the rarest vivid yellow diamonds ever. It's over 2 carats. It's a vivid yellow Asher cut flawless diamond. That diamond's worth up to $400,000 at this point. We've got some magnificent kilo silver coins. We've got some beautiful flawless yellow diamonds. We've got some Argyle pink diamonds on the site that are just absolutely sensational. And we believe that Argyle's, for the short term, the best short-term play in diamonds is Argyle pinks. There's no doubt about that. You could be in and out of that investment in less than 5 years and do tremendously well because the Argyle mine is getting ready to close. And on top of that, this auction will continue throughout the rest of the year. So what we'll do as pieces sell off of it, we're going to add other magnificent pieces. We have the last 8 pieces of Elizabeth Taylor's estate, and we have over 3,000 pieces of museum quality jewelry, almost all of them in rare colored diamonds that are become available on our auction site. Along with that, we'll help some of our clients sell their diamonds if they want that, even though, again, at this point, diamond is one of the best long-term investments you can make. Short-term, you don't do as well. Long-term, you do tremendously well, as Randy just proved by the auction results that he just read. So, again, there's tremendous opportunity at this point. The markets are ever changing. You can't be complacent. You can't just sit there and expect that investments that you made 10 or 15 or 20 years ago are going to be relevant today. Everything is changing. The whole economy is changing. We're now dealing with interest rates at almost zero, and in parts of Europe, interest rates that are negative, meaning that when you put your money in the bank, you're literally going to be paying that bank in order to hold your money for you. Times are changing. You need to change with them. My strongest recommendations at this point: don't speculate and take risks. Don't leverage. Don't finance your metals. You're only going to lose on those situations. What you need to do is own your assets outright. Be in the alternative asset market. Alternative assets to paper assets like stocks and bonds that are doing horribly at this point. You want to be in physical gold. We're selling to our clients kilo bars, 2.2 pounds, 35.15 ounces of pure gold in kilo form. They're absolutely stunning. We will sell those to you at bare cost, meaning that if you buy gold and it moves up 1 penny, you're in profits. We will not take a penny of your profit. We will not charge you a commission or a spread. And the reason for that is that we own our own gold mines. Number two, rare colored diamonds. Probably one of the best long-term investments you could make. They never lose their value. They increase in value substantially. They are currency driven and one of the best investments you could possibly make. We recommend very strongly that you look at the rare colored diamond market. And then look at our private programs. One program that pays over 25% a year in U.S. money, another program that will let you invest with us in the rough diamond market in some of these amazing buys that we've been able to make. So, again, there's opportunity for our Canadian clients to get involved and start to make some money again in real assets, not paper assets, and that's what we bring to you.
Connect with Harold, 1-800-432-1022, 1-800-432-1022. How do you invest today so you can retire tomorrow? That's why we do this radio show. Harold is happy to take your calls. He speaks with many listeners every week, hundreds of listeners per month. And if you would like to speak with him personally and privately, 1-800-432-1022 is his telephone number. The website, rarecoloreddiamonds.com. And will we ever be able to retire in the environment that we're in when you have 1% interest rates? It's very hard to retire in the financial world we find ourselves in today, and everyone's worried about, obviously, the markets in general. Bill C-15, what does that mean to you? Bank bail-ins, negative interest rates, weak Canadian dollar, oil prices, housing problems in Vancouver and Toronto, cashless society, lots of questions. And Harold is there to speak with you, to give you the answers and tell you that, yes, he has some solutions where you can start making money today. 1-800-432-1022. Our featured diamond a couple of weeks ago was a .33 carat radiant cut fancy green. It was followed up last week with a 1+ carat radiant cut fancy light blue. And this week we have a 1+ carat radiant cut fancy intense blue. 3 weeks in a row, we have had Rockstar Diamonds as our featured diamond of the week from the vaults of rarecoloreddiamonds.com. You can see it online, a featured diamond of the week, rarecoloreddiamonds.com, and it is absolutely gorgeous. Get our, and this is important, get our auction results from Christie's. We'll be happy to send them to you. And Harold, once again, we've come to the end of another show, and I encourage people to get that report about the Canadian housing market busting as well from Bloomberg. It's a must-read. Thank you for your knowledge, and thank you for another great show.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Take Harold up on his offer. Connect with him, 1-800-432-1022. The website, rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.